Today we're talking about a concept that decides whether a claim gets paid or denied, even when the damage is real and obvious. That concept is proximate cause. Here's the problem insurance has to solve. When a loss happens, it's rarely one clean event. Usually it's a chain. One thing leads to another, and eventually you end up with damage. So the insurer has to answer a very specific question. Which event in that chain counts as the cause of the loss for coverage purposes? That is where proximate cause comes in. Think of proximate cause as the main cause that truly drives the outcome. It's the cause that makes the loss happen in a natural, connected way, without a completely new main cause taking over. It does not have to be the first thing that happened, and it does not have to be the last thing that happened. It's the cause that best explains why the loss occurred. And here is the key insurance rule. For a policy to pay, the proximate cause must be an insured peril. If the proximate cause is an excluded peril, then the claim is not covered, even if something covered appears somewhere in the chain. Let's make this feel real. Imagine a finished basement. After a major storm, the city sewers get overwhelmed and water backs up into the basement. You look at the damage and you say, "It's water damage." That seems straightforward. But insurance does not stop at the final damage. It asks what caused the damage in the first place. If the proximate cause is sewer backup, and sewer backup is an excluded peril under the basic policy, then even though the immediate damage is water, the claim can still be denied. Why? Because the insurer follows the cause chain and focuses on the peril that truly drove the loss. Now let's separate a few key terms that often get mixed up. A remote cause is something earlier in the story that may have set the stage, but it is not the main driver of the loss at the end. It might be connected, but it's not the cause that the insurer treats as the controlling one. An immediate cause is the last step right before the damage, the final link in the chain. People often assume the immediate cause is the one that matters most, but insurance does not always work that way. The immediate cause can be part of the chain, but the decision usually comes down to proximate cause, not simply the last event. Here's an easy way to picture it. Think of dominoes. The last domino that falls is like the immediate cause. The first domino that was pushed could be a remote cause. But the question is, which push or action truly explains why all the dominoes fell in a connected way? That's the logic behind proximate cause. Let's use a clear example. A building is weakened by a fire next door. Later, the weakened building collapses. The collapse is the immediate event right before the damage becomes obvious. But the collapse happened because the structure was compromised. In that situation, the fire can be treated as the proximate cause because it is the main driver that set the loss in motion and stayed connected to the outcome. If fire is an insured peril, the claim can be covered even though the collapse is what you see at the end. Now let's flip it. Suppose there is a fire in a nearby building, but your building is fine. Weeks later, a contractor doing repairs nearby acts negligently and causes your building to collapse. In that case, the fire is not the main driver. The fire is more like background history, a remote cause. The real driver, the proximate cause, is the contractor's negligent action because that is what directly leads to the collapse in a meaningful way. The chain was not, fire naturally leads to collapse. The chain was interrupted by a new main cause, negligence during repairs. And that idea of interruption is crucial. If the chain of events keeps unfolding naturally without a new dominant cause taking over, then we can usually trace the loss back to the proximate cause. But if a new main cause steps in and changes the story, then the proximate cause can shift. Let me give you another everyday example that insurers see all the time. A roof is damaged by wind. Then rain enters through that damage and ruins the interior. People may call it rain damage, but the insurer may ask, did the rain enter because of wind damage? If wind is the insured peril and it created the opening, wind can be treated as the proximate cause and the resulting water damage may be covered. But if the roof already had an opening from poor maintenance or pre-existing damage, then the insurer may not be able to connect the rain to an insured peril. In that case, the claim can be denied because the insured cannot prove the right cause chain. So the big takeaway is simple, and it is worth repeating. Insurance does not just ask, what happened? It asks, what caused what happened? And specifically, it asks whether the proximate cause is an insured peril or an excluded peril. If it's an insured peril, coverage is more likely. If it's an excluded peril, the claim is likely denied, even if the final damage looks similar to something that is sometimes covered. Once you understand proximate cause, claim decisions stop feeling random. You start to see the logic behind coverage, exclusions, and why the cause chain matters as much as the damage itself.